Have you ever opened your banking app after payday, saw your paycheck hit, and for just a moment felt relieved? Like maybe this month would finally be different. Maybe this time you'd actually get ahead. But then, rent clears, your car payment hits, credit card auto pay kicks in, groceries, insurance, subscriptions, gas, and suddenly that paycheck that was supposed to move you forward has practically vanished. And you're left staring at your balance wondering, how am I working this hard and still feeling broke? Mira, this is the part nobody explains properly. Most people think debt is just a number, a balance, a monthly payment, a simple financial obligation. But debt is so much bigger than that. Debt affects how you think, how you sleep, how you plan, how desperate you feel, how much freedom you actually have. And perhaps most dangerously, debt can quietly become so normal that you stop realizing how much of your life it's stealing. Here's what most people don't realize. Debt is not just about what you owe today. It's about how much of your future income already belongs to someone else. That means debt is literally a claim on your future labor, your future time, your future options. And depending on how much debt you carry, your life can feel completely different, from total freedom to total financial suffocation. So today, we're breaking down exactly what life looks like at every major level of debt, from zero to over $1 million. The math, the psychology, the hidden lifestyle consequences, and most importantly, how to avoid letting debt quietly control your life forever. Because once you truly understand debt, you stop treating it casually. And that realization could change your financial future permanently. Let's start with the ideal scenario. Zero debt. No credit card balances, no car payments, no personal loans, no student loans, no mortgage. Every dollar you earn is yours. Now, let's be clear. Being debt-free doesn't automatically mean you're rich. You could still have a modest income. You could still be building savings. But psychologically, zero debt creates something incredibly powerful. Margin. Flexibility, breathing room. If your boss is toxic, you can leave. If an investment opportunity appears, you can act. If an emergency happens, you're not instantly forced into panic mode. According to Federal Reserve data, millions of people would struggle to cover even a $400 emergency expense without borrowing. Think about how fragile that is. A flat tire, a medical copay, a broken appliance, and suddenly debt begins. So zero debt isn't just a financial milestone, it's a psychological advantage. It allows long-term thinking, and long-term thinking is where wealth actually begins. Now, here's where things start getting tricky. This level often feels harmless. A few credit cards, maybe a small personal loan. Buy now, pay later balances, retail financing. Most people here think it's manageable. And technically, maybe it is. But this is exactly where debt becomes deceptive. Because small debt often feels normal enough that people ignore its long-term cost. For example, let's say you carry $6,000 in credit card debt at 22% interest. Your minimum payment may look manageable, maybe $150 a month. Doesn't sound devastating, right? Wrong. If you only make minimum payments, repayment could stretch for decades, and interest could easily cost thousands beyond the original purchase price. This is where psychology beats math. Because minimum payments reduce urgency. They create the illusion that everything is under control, even while your wealth-building potential is being quietly drained. This is like carrying a slow financial leak in your future. Not dramatic enough to panic, but destructive enough to delay wealth for years. Now we're entering serious territory. This range often includes car loans, larger student loans, medical debt, high-interest consolidation loans, major credit balances. And this is where debt starts influencing major life decisions. Here's where it gets really interesting. Debt at this level doesn't just reduce wealth, it compresses your choices. You may stay in jobs you hate longer, delay entrepreneurship, postpone moving, avoid investing, put off relationships or family plans, because survival becomes priority number one. For instance, a $40,000 auto loan with interest may cost over $700 monthly depending on terms. That's over $8,000 annually. If invested instead over 30 years at average market returns, that money could potentially exceed $900,000. So when people say, it's just a car payment, no, it may actually be a six-figure wealth sacrifice. This is what the average consumer misses. They focus on affordability. Wealthy individuals focus on opportunity cost. And that difference changes everything. This is where debt often becomes socially normalized. Mortgages, large student debt, multiple vehicles, home renovations, business loans. And society often encourages this stage because on the outside, it can look successful. Nice house, nice cars, respectable lifestyle. But here's what most people don't realize. Appearances can be deeply misleading. Many households earning six figures still live paycheck to paycheck because their fixed debt obligations consume nearly everything. A large mortgage, car leases, credit obligations, insurance, taxes, maintenance. Suddenly, high income doesn't equal freedom. It equals high-pressure maintenance. According to multiple financial studies, a significant percentage of high-income earners remain financially fragile despite appearances. Why? Because debt can create the illusion of wealth without actual ownership. This is the classic middle-class trap, using future income to fund present appearances, and often confusing finance lifestyle with real financial progress. Now we enter advanced territory. At this level, debt can mean two very different things. Option 1, strategic leverage, real estate portfolios, business expansion, cash-flowing assets, professional degrees with high ROI. Option 2, catastrophic overextension, oversized mortgages, luxury consumption, business failures, speculative investing. This is where debt becomes extremely powerful, for better or worse. Here's the truth. Debt itself isn't automatically evil. Strategic debt can accelerate wealth, but emotional debt destroys it. For example, an investor with $800,000 in property debt generating positive monthly cash flow may be building serious wealth. But someone with $800,000 in liabilities and unstable income may be one economic downturn away from collapse. This is why wealthy individuals obsess over cash flow, liquidity, interest rates, risk exposure. Because leverage magnifies everything. Wins become bigger, losses become devastating. Debt at this level is like fire. Controlled properly, it powers engines. Handled carelessly, it burns entire futures. Now let's talk about something even more important than math, psychology. Because debt changes behavior in ways most people underestimate. Debt can increase anxiety, reduce confidence, shorten decision-making horizons, increase desperation, and encourage short-term survival over long-term strategy. In simple terms, debt can trap you mentally before it traps you financially. When people feel overwhelmed by debt, they often avoid checking accounts, ignore statements, delay planning, seek emotional spending relief, and normalize financial stress. And that creates a vicious cycle. Stress causes poor decisions increase debt, more debt increases stress, and the spiral continues. This is why escaping debt is not purely mathematical, it's behavioral. You must rebuild both numbers and mindset. So, how do financially successful people break free? First, they stop prioritizing appearances. Looking wealthy is often one of the fastest ways to stay financially weak. Second, they aggressively eliminate high-interest consumer debt because 20% interest is mathematically devastating. Third, they build emergency reserves. This prevents small crises from becoming major debt spirals. Fourth, they increase income strategically, raises, skills, businesses, investments. Fifth, they only use debt when it creates productive value, not temporary status. And finally, they understand a crucial truth. Wealth is not about how much you earn, it's about how much you control. Your debt level shapes far more than your bank account. It affects your freedom, your stress, your relationships, your opportunities, your retirement timeline, your ability to take risks, your overall quality of life. Because every dollar owed is future effort already assigned elsewhere. So whether you're debt-free, managing moderate balances, or facing overwhelming obligations, the mission remains the same. Regain control, reduce dependence, build margin, and increase ownership, and move toward true financial freedom. Because in the end, the people who truly win financially are not always those who earn the most. They're often the ones who owe the least, control the most, and understand debt better than everyone else. So take an honest look at your finances today, not emotionally, not socially, but strategically. Because once you stop borrowing against your future, you can finally start building one.